This is the One Point Podcast, and I'm Rohit Yadav. Today's episode is a really special one. First, it's in person, and second, it's on a very critical topic: tech for good in venture business. And to discuss this and explore it in much more deeper analysis, we have Paul Miller with us. Paul, thanks for joining us.
Thanks for having me.
Before we get deeper into this topic and explore this topic from multiple directions, I'll briefly introduce yourself. So, Paul pioneered tech for good business since 2008 as the co-founder of Bethnal Green Ventures. Over those years, he has helped numerous companies from the really program level, initial level to the exit level. And he has also done strategy consulting work for a lot of multinational companies as well as for the government. So, Paul, the first question for you is, please introduce Bethnal Green to the audience.
So Bethnal Green is actually a district of London. We're not just Green Ventures, which I think a lot of people internationally would assume, but it's the district of London just next to the city. Mm-hmm. But you've got all that wealth there, but actually traditionally or sort of historically, Bethnal Green has been one of the most deprived boroughs in the UK. It's not the kind of place that you would normally expect there to be a financial services firm or a venture capital firm. So there was a little bit of sort of tongue-in-cheek, as we would say, when we named the firm, because it's not the kind of place you would expect a venture capital firm to be. But that's where we started. 12 years ago, we made our first investment into a really early stage tech for good business. And we've been doing that ever since, helping founders when they're just that kind of prototype stage where they've got something that they think could solve a social or environmental problem, almost always pre-revenue. Certainly, we're almost always the first investor into that firm, typically a team of 2 or 3 people who really understand a particular problem. And they come from quite a diverse set of backgrounds, as I'm sure we can talk a bit more about.
Sounds good. So explain to the audience this tech for good philosophy and how you're integrating it within Bethnal Green Ventures right from the beginning up till now.
Yeah, so the idea of tech for good came from actually a startup that I worked on previously. So before Bethnal Green Ventures, so it was called the School of Everything, and we were what would now be called an ed tech venture. At the time, this was back 2006. That wasn't even a term really, and we started that venture with the aim of changing the system for adult education. We had a mission. We wanted to disrupt this quite old, fusty system of further education colleges and try and open it up so as people could have far more opportunity as they developed, in life. And as we built that startup, realized that actually that idea of a mission-driven startup wasn't something that the still nascent European venture capital ecosystem it understood. It was still trying to look for the next Google or whatever it might be. It hadn't got to the point of okay, maybe motivations are a little bit different now. Maybe founders want to solve social, environmental problems as well as just make money. And that's really where the idea came from, because as we were quite high profile in trying to do that, other people came out of the woodwork and were like, I want to do that too. And I started to realize there was this community of people who needed a bit of support and certainly some investment to get going. But there was this community of people who were driven by solving social, environmental problems, making change, as well as wanting to build high growth, successful, valuable businesses.
Okay. And so tell us, how had it evolved through all those years, right? So that's kind of an interesting story. So you are pioneering tech for good in UK, and you started initially, and there are a lot of other VCs who started focusing on this topic. How has this evolved for you? Were there any kind of highs and lows in this journey?
Yeah, so when we started, I think most people thought we were mad, or they thought we were sort of fluffy and good and charitable. There was this association between tech for good and charity, and there were a few people though who got it and were like, oh, hang on, if you solve those problems, huge value is going to be unlocked. But they were a small number to start with, especially on the investor side, on the LP side for the fund. And I think also we found that there weren't really many later stage businesses to support or to invest in. So we initially really focused on that early stage because we had to, because people weren't getting to the later stage because they needed the support at the early stage. And we started with an accelerator program. It was a model that was just starting to take off. I think Y Combinator had just done their first big cohort. Techstars had just opened up in their second location. It was just starting. So we took that model and we were like, okay, let's apply that to Tech for Good founders. That worked very well for the first few years, but we soon learned that we needed to be able to provide follow-on funding as well. And really, it was at that point that we were like, hang on, okay, the program side of what we do is still important, but really we're a venture capital firm. And I think that was when we started to describe ourselves as a Tech for Good VC. And that was probably one of the key moments. That also opened up different kinds of investors to us and different kinds of LPs. And we started attracting investment from high net worth individuals who wanted to put their money to work, and more latterly, in the last couple of years, institutional investors. But that evolution has gone hand in hand, I think, with that idea that doing stuff for good is charity. That's become more of an unpopular view in some ways, and actually it's become more mainstream to think about impact as a source of value, as a source of competitive advantage, and as a really important part of the financial services world. So yeah, things have got better.
Okay, makes sense. So you consider this ideology that a lot of folks consider Tech for Good as a charity. So there was this initial kind of, let's call it stigma in some way. And do you think that this has gone away completely, or do you still think there are some fragments of that ideology or kind of apprehension still remaining in the ecosystem?
Yeah, and don't get me wrong, I think you can do Tech for Good as a charity. I think there are some fantastic organizations out there delivering social benefit as charities using technology. That's absolutely great, but I think there's a separate thing, which is for-profit businesses having an impact as well. And I guess my belief is that the for-profit businesses will scale further in terms of their impact. That I think we're still showing that, but the evidence is growing that is true.
Okay.
So I'm not saying that charity is a bad thing. I've been involved in lots of charities, but I think that the idea that you can unlock capital markets, you can unlock these huge pools of capital and direct it towards social and environmental problems through the route of venture capital, startups, and so on. That has become a more accepted view over time, and that's the spot that we sit in.
Got it. And within this journey, there must be some companies within your portfolio which have exited, right? So tell us a couple of stories of your portfolio companies and how those startups evolved through this time of the last decade.
Yeah, so a pretty good example actually is a company called Apparito. We first invested in them, I think in 2015. I'll have to check that. But we met one of the founders a little bit before that. And actually, she was a former nurse. She was a pediatric nurse. She worked with children. And one of the parts of that job was that she was at Great Ormond Street Hospital in London, which is sort of pioneering hospital, and so very attractive to companies who want to run clinical trials. And she saw how these clinical trials were being done with children. She's like, there's something a bit wrong here. This isn't really working. Like, kids don't fill in forms very well. So essentially they would have to come into hospital, be measured, and to have she's like, this isn't the best way of doing this. She also had experience of working with the medical regulator. And so she could see that actually they were pretty frustrated with this system as well, in that the data was often terrible when it came to the point of validating clinical trials. So she came to us with this idea, okay, I want to build software that's able to collect data from children, particularly in clinical trials when they're outside of hospital. So from wearables or from video or from all these kinds of things. Turns out, that was a really good idea. It's particularly starts to change the outcomes because it means that more clinical trials are able to complete, because you need to get the burden of proof. If you've got more data, more high quality data that you can collect, those trials can complete faster, and more of them actually get to the point where that medical intervention or pharmaceutical or whatever it might be can get to market. Company grew very, very nicely. She's a proud Welsh woman. She sort of partly built the company in Wales, in Wrexham. If you're a football fan at the moment, you'll have seen Wrexham are doing very well. We can't claim any credit for that, but it's built the company partly in Wales, partly in London. They've just been acquired by Eli Lilly, the world's biggest pharmaceutical company. So that was a journey over the course of just under 10 years. But now that software will be used in far more clinical trials and will hopefully lead to more of those clinical trials completing, and the outcome of that being that hopefully more people with more perhaps slightly more difficult or rare conditions will be able to be treated.
Okay. And within your portfolio, is your focus on certain areas like health tech, or do you just more generalistically focus on the entire spectrum of startups? And how do you evaluate startups within your Tech for Good philosophy?
So we think of it in terms of the outcomes we're trying to achieve. So we talk about we're looking for startups that contribute to a sustainable planet, healthy lives, and an inclusive society. Right? Those are the phrases we use. Actually, that covers all kinds of things. It covers both preventative health as well as clinical settings. It includes education. It includes democracy. There's lots of things that you can include in there. So they're more of a shorthand for we're interested in anything where you're setting out, and these I think are the key words, to have an intentional and measurable positive social or environmental impact. So ultimately, that's what we're looking for. We're looking for businesses where they're intentionally trying to solve a particular problem.
And when you say measurable, it's very interesting because a lot of VCs don't really measure the outcomes of how the portfolio companies are actually functioning on specific topics, but you do, right? So as my understanding goes, you are very focused on initial kind of checking with how the Tech for Good would fit into their philosophy and the startup would fit in. And you actually have the KPI measures for checking how scalable the company would be and so on. Can you explain a little bit about that?
Yeah, so the measurement of the impact is very important to us. I think this is really because ultimately we think this is so important that you need to make sure that what we're doing is trusted. And this is about trust, to be honest, because the risk of a backlash against Tech for Good is quite strong because with good reason, people are cynical. If somebody stands up and says, I'm going to improve the world, people are like, really? So we need to be able to evidence that, to demonstrate that, so as we build trust in the companies. And there's already been examples, I think, Theranos or whatever, where you've had founders who tried to go out or said they're trying to go out to change the world. Actually, underneath there wasn't. So having that proof, having that demonstrability, I'm not sure if that's a word, but is really important to us. However, having said that, it's not easy. What we do is we think about it as the company develops, we want to ratchet up the standard of evidence for their impact. So when we start out, the companies, we ask them to create what we call a theory of change. So, okay, it's a kind of, if this happens, then this will change. If we do this, we think this will be the outcome. Very simple, but all of our companies go through that. The next thing we ask them to do is to choose a simple, usually kind of output metric that will show a little bit of is that changing. So that could be the number of people who've been reached by the technology and what's happened to them. Then the next step up would be to get that externally validated, so independently validated, and so on. And these are all at different stages of the startup. Independent evaluation of your impact could cost money. You need more capacity in your team to be able to deal with that, and so on. So,
and also time, right?
Yeah, and you need a data set. So we don't expect that on day one. Over time we basically try and help teams to improve their impact measurement, and we think it's super important because I think if you can do that, you can prove to investors. Also, you prove to potential employees. Employees are also want to know this stuff. They want to know that the company they're working for genuinely is having an impact. And so we think the measurement is really important. I think it's going to get more important over time as well.
Thanks. Let's change the topic for a moment and let's change the gears over here. How has the diversity topic changed within the UK ecosystem in the last couple of years. There's a lot of things happening across the globe, especially in the US, where there's a bit of, I would say, backlash. E&I efforts were on top of the agendas maybe 5 years back, but not so much right now. So how do you see within your ecosystem at present?
Within the ecosystem, yeah, it's not great. I think is the honest answer. I think it is better than it was. There have been improvements, but we're still at a position where a very small amount of money is going into like people with different backgrounds. So I think there's lots of different levels to this, aren't there? There's the kind of the visibility of people with different backgrounds. I think that's probably got a bit better. Then there's the kind of initiatives to support people with different backgrounds. I think those have started to improve. But when the rubber hits the road, what money is going into startups with people from non-usual suspects kind of backgrounds in the venture capital industry more widely, it's still not great. It's terrible. And so I think it is going in the right direction in the UK. We haven't had that backlash that has happened in the US, which I'm sort of thankful for to some extent. But it's we're still a way away from where we want to be. Having said that, in impact VC and sort of the tech for good world, the stats are much better. So, and I think it's to some extent no accident, because I think that people from I don't want to be. You've got an MBA, haven't you? Can I be rude about MBAs just for a minute?
Go ahead.
But there's an element of people who've got, sort of come into the startup world from an engineering or MBA background or finance background, thinking I want to start a startup before thinking about the problem that they want to solve. That's the more traditional pathway into the startup world in the UK, particularly. I think that's less prevalent in the tech for good and impact world. You get people coming from very different backgrounds because they're motivated by the problem they want to solve. And in our case, we're looking for people who've got that first-hand experience of the problem as well. The lived experience of it tends to mean that the people who are approaching us are from a much wider range of backgrounds than other VCs, than more sort of straightforward VCs. So in the tech for good world, the diversity stats are much better.
Okay. So what you're saying is, just because the focus for you guys is tech for good, you're already kind of having a more encompassing view of what the market is, and the kind of let's say founders which are coming to you are already very diverse in general by itself, right?
Yes.
As they would come to other VCs probably.
Yes, I think so. You see that that then gets replicated in the people that they hire. So we back the founders, but then they grow those companies. And what we've tended to see is that the founders from more diverse backgrounds tend to replicate that in their teams as well. So then you look at the whole stats for the BGV portfolio, and they're very good compared to the statistics of other companies. But we can't take any credit for that. But that seems to be the self-reinforcing piece. And then going one step up, we're a majority female team at BGV, and I think that's always been unusual in the venture capital world. But that, I think, means that particularly women are more open to approaching us for funding than perhaps they are with some other VCs, and they feel like they're going to get a good hearing, which they do, and that helps as well. So it's at every different level. We have tried to do it, but it has also to some extent come naturally because of what we're trying to do. So it's not been that we just sort of decided one day, okay, we're gonna support diversity. It came very naturally to us based on what our mission is.
As you said, it's kind of a self-enforcing loop, right? So if you have certain kind of parameters, if your thinking goes in that direction, it's automatically kind of you're attracting the right folks within the startup ecosystem. So you said like you are majority female led VC firm, right? So within the investment phase, yes. Is there any other kind of debiasing techniques that you use with the evaluation process of a startup?
Yes. So all of our startups, probably explain that the way that we make our first investments into startups is through our program. We call it our Tech for Good program. We run it twice a year, and that is open for anybody to apply to. There's no warm intro needed is the way that we describe it. So the application form is there, everybody can apply. That's very helpful as a starting point for debiasing, because then you can sort of, you can say, okay, we've got this now raw data, if you like. Okay, how are we going to deal with that? What we do is those applications are reviewed by at least 5 people, probably 2 people from the BGV team, some people from our portfolio, some founders that we backed before, and some mentors from our network as well. Okay. So we're always trying to get a diverse range of views about each startup as well, and I think that helps to debias who are the founders as well. So yeah, we've always had this community-led approach to shortlisting the ventures. Ultimately, the decision comes down to the BGV team as that process narrows down to the final choices. But by the time we get there, you've got a very diverse pipeline. So it's very we don't tend to see any change in the diversity of the founders as they go through our process.
So it's diverse by default, right?
Yeah.
Somehow. You mentioned that within 5 people, there are also founders who are looking at the deals, right?
Yes.
The founders within your portfolio, right?
Yes.
How does that happen?
So these are the online applications. So they people who apply, we do tell them this, and obviously there's sort of strict confidentiality. We also would never ask somebody who's conflicted to review an application. So we don't try and do that. But yeah, I mean, it's super helpful. Founders know lots of what to look for in pitches. I think people do it because they like to know what's coming as well. There's a sort of, we have no shortage of volunteers to help with shortlisting.
Good to hear.
But yeah, it's always been good. And then there's always a founder on our interviews as well. So it's not just the online piece. When we interview a team, it'll be 2 members of the BGV team, a founder from our portfolio, and one of our mentors as well.
Okay. And except for this kind of setup for evaluation process, second, having the right team within the VC firm itself, and having, let's say, on the top of the funnel, being very broad and being open to everybody, do you see any other kind of solution which would promote diversity within the ecosystem?
Yeah, so I think that you still have to work hard on top of that. So Dharma, who you know, has done a fantastic job of just very proactively reaching into networks where I think they're sometimes a bit surprised to see us. But that's the proactive side of it. So making sure that we've made sure that we're we've pushed hard into refugee networks, for example, or into sort of not necessarily the startup clubs at universities, but into groups where there are likely to be more diverse potential founders. And it doesn't always work. We don't always get great applications from those networks, but that's one thing that Dharma has led, I think, really well is to push into networks where we think there may be people who understand problems in a different way, or even problems that we didn't know about, and that's what we're trying to do with that proactive outreach that we do.
Sounds excellent. Shifting gears a bit, I want to focus on founders now, and how do you view the founder challenges? If you look at the diverse founder, underrepresented founders, or let's say tech for good founders, what are the biggest challenges they are seeing right now in bringing their company, their startups to VCs?
So, I mean, the simple answer is funding, and that's where it shows up. Is that companies have always this is not unusual. They've always struggled to raise money. You hear the stories of the one where it's super easy and they raised huge rounds, but the truth is that the vast majority of startup founders struggle to raise money at every stage almost. I think One of the things that I think I've noticed over time is that there's this shorthand of VC, but actually it's a myriad different forms of investment. There's lots of different types of investor now. I'm not sure whether it's always been this way, but certainly I've noticed it much more as the ecosystem has developed. So in the UK, you have even a kind of pre-seed stage, you have some different fund structures. You have like sort of some GPLP funds, you have some tax advantaged funds, and then you have some angel syndicates, and then you have some individual angels. They all operate completely differently. They all have different motivations, different processes, and so on. So to lump that all together to a startup founder and say, like, you do it this way is a bit of a that's I think that causes some problems. So yeah, what we try to do is try to give them a broad overview of how this world works, but then try and really drill down into okay, who's really your target? How do you change your messaging? How do you develop your story? How do you pitch yourself in order to get the right kind of investor? And that's something that we've developed over the years. The other side to it, I think, which this is slightly early days, but essentially we found that with our previous funds, we weren't able to lead follow-on rounds into our companies that we backed at the early stages. We were able to sort of co-invest with another lead. And what we found was that essentially, as you maybe got through the first couple of rounds, but when you got to particularly sort of proper seed rounds, let's call it, sort of million plus, that diversity dropped off. So like we had this like sort of pipeline of really great diverse founders, but when we like hit the VC world, the diversity of the founders, the people going through that,
the percentage actually dropped down.
Yes, particularly around female founders. So with our new fund, which we have started investing from this year, we've upped the amount that we're able to follow on, and we are very deliberately able to lead those rounds. And what we want to do is try and make a difference through that gap. So where we can say, like, we know these founders. Okay, they may not look like you, dear Series A investors, but we can sort of show that we believe in them by leading those rounds and having other people join. So we're hoping that will make a difference at that point. But it's still early days for that.
Okay, so let's consider fundraising as one vertical of challenges, right? So we all understand that there is a fundraising challenge, and you said like there are two aspects to it. One from probably the VC side, because there are less follow-on capital, but you are kind of changing that with your new fund, right? And the second one, you said there's some lack of awareness in what could be the fundraising targets for the founders, right? Except from this fundraising vertical, do you consider there are any other challenges that you have seen in the ecosystem that founders approach you and say, hey, we are facing these kind of challenges, and what should we do about it?
I think there's been big changes in the way that you get your first customers over the last, is it 5 years? I would say, and some of that is actually very positive. So I'm sort of speaking more from a UK context here, but certainly when we started with BGV, it was very, very difficult for a startup to get an initial contract with a large business or with the public sector. So in the UK, the NHS or whatever it might be. That has changed. And so now actually we do see our startups getting these initial contracts with those people. But the programs that happens through and the bureaucracy it happens through are on a level. We're in this stage where it's possible, but you need some help to navigate it. So that's one of the other things that we find ourselves doing, is helping our founders to navigate those early customers, particularly public sector and larger businesses. And the good news is it's now possible. The bad news is it's complicated. And that's, I think we find ourselves working with founders on that a lot.
Okay. What I have seen is that the kind of the funnel itself, there is a lack of awareness within the founders who probably are focusing on tech for good or are coming from diverse backgrounds or underrepresented backgrounds. Their understanding of how the VC world works and what is required to get funded from VC, right, is a bit different and a bit low, I would say. So there is a lack of awareness on that very initial level, maybe even before they have started their company or before they have formed their company, right? So what I personally believe is there should be like more and more, I don't know, podcasts or maybe awareness programs or maybe VCs going out there, as you guys do, going out there and having sessions with the founders who are thinking about going into this journey on how the VC world really works. What are the different funding opportunities, as you said? What is required to get your first customers? Are you guys prepared? What is required to do? Let's say, what is a good deck? I know that no deck is perfect, but right. Do you believe in this, that awareness is one of the biggest challenge and we need to somehow change it?
Yeah, absolutely. I think it's getting better. I remember when I was sort of doing startup stuff back in 2006, so like sort of pre even the London startup scene really certainly coming of age. VCs didn't have websites. Like, yeah, I mean, it was like they would deliberately be secretive because they only wanted to source deals through their like very, very kind of high level network. They were very deliberately secretive. That has now started to break down in that VCs recognise that, you know, maybe they're not going to like meet the perfect founders through their private members club or whatever it might be, but there's still a long way to go. And it is at the point, I think, where a lot of what VCs put out publicly is effectively spin. It's not necessarily true. It's not necessarily an authentic representation of like what it's like. There are some honourable exceptions to that. I think there've been some fantastic VCs who've blown open in some ways, like how this works. But yeah, there's still a huge amount of distance to go. But yeah, I think it's as an industry, the VC industry, should be much, much better at explaining how this goes on. We have a bit of a sort of internal kind of catchphrase, which is no negotiation without education. So we don't ever want to use our position of power because we know how the system works in order to negotiate. So we would always ask our founders before we go into those sorts of situations, essentially, do you understand? Can we explain how all of these things work before we even start to talk about terms or the pros and cons of different approaches. So that's our approach, is to try and make sure that everybody understands the situation before going into it.
Okay.
And that's
what you mentioned about explaining, is this to the startup that you're about to fund, or okay?
Yeah.
So let's take a hypothetical example. So there are, let's say, 50 startups who applied to your program initially, and maybe let's say 5 got selected, hypothetically. What happens to the remaining 45?
Yeah.
Right. That's a tricky question always.
Yeah. So some of them reapply and get in. So actually, there's several successful startups where they've got in on the third go.
Okay.
And that's because, it's because they're brilliant founders who are really tenacious and so on. But part of it is also that we try to give feedback.
Okay.
So especially after the interview phase of our process, we try to say, okay, this is why you didn't quite make it, or this is what you could improve in order to get to the next step. So that's part of the education piece, I guess, as well. So yeah, sometimes it's not that easy actually to give that feedback. Sometimes it is there was just this other startup, but in some ways that just felt a bit more of a slam dunk. So we're not being critical. We're just sort of saying, if you work on this a bit more, you're there. So that's one part of it.
And do you think giving feedback would improve the startups?
So that it seems
it's a lot of work, right? Giving feedback to 45 remaining.
Yeah, founders. It is about that. So we interview 50. We usually get around 350, 400 applications. Okay. We interview, roughly speaking, 50, and we usually choose 10.
Okay.
So yeah, there is going through that feedback. It's a fair amount of work on our side, but we think it's worth it.
Okay.
And then actually, it's going on at the moment. We've now just we've selected the group that we're about to invest in, and actually this week we're spending a lot of time with them, talking through the terms of our investment, making sure that we've tried to make it as plain English as possible. We've tried to sort of say every element of it we will talk through to make sure that they understand it, and we also give them make sure that they know that they can talk to existing BGV founders to get their side of this, how it works and so on as well. So.
Got it. On the founders side, do you have any advice for the founders themselves on how they should capture on these challenges? How should they attack any challenges that are coming their way, right? Except for fundraising. I mean, we understand the fundraising is a challenge, but apart from that, other challenges. Do you have some low-hanging solutions for the founders?
I'm not sure they're low hanging because they are hard, but I think there is an element of like how you take setbacks, how you take essentially information that says you're not going to sort of step forward in this case, and that can be on product as much as on fundraising or on developing your team or whatever it might be as well. And I think there's the thing I spot in founders who tend to be the ones who are more successful is essentially they kind of they note that feedback and so on. They may have an emotional response to it, but they kind of collect it and then decide what they're going to do to take it forward. In many cases, I would say the actual answer is nothing. And actually, it's like ignore that, choosing what feedback, what things to sort of that are just essentially they're part of the process. This is classic sales like sort of thing, is that you need the no's in order to get the yes. And I think the best founders have that mentality in terms of like they recognize every setback as a bit of a learning opportunity. And then if you do that every time, you start to move forward.
Okay. So tenacity to keep on going on, right? And understanding what advice to take, what not to take, right? And do you think networking is a bigger piece missing within the tech for good founders or diverse founders and so on? And how much more, or if there is kind of a solution around it, or you would say like your magic trick, right? How should the founders go about networking as a topic?
Yeah, it's a good question. So people seem to take this very differently, actually, in terms of, I think there's lots of very, very different approaches to networking. I think obviously a network is important to you as a founder. Some people are very proactive in events and so on. I think really it's about finding your medium, if I'm honest. It's like where are you most kind of comfortable but also successful in building relationships. And I think, somebody once gave me the advice, and this is essentially all you need to do is be interesting. So it's like it doesn't matter what context you're in. If you're interesting, like the people who are interested will seek you out. They will notice you. They will find you. So if that could be on LinkedIn, it could be on like TikTok, it could be events.
Okay.
But if you can make sure that there's a kernel of just interestingness in your approach, then people will seek you out.
Got it. Do you think role of mentors and advisors is critical for the founders at the very initial stage? And how can they help in securing the future of the startup itself?
Yeah, so it definitely is. I would say it's rare that it's super important at the initial stages. So again, it's this piece of actually you'll get lots of advice. Much of it you should ignore. But again, it's worth being fairly promiscuous, to be honest, with mentors and advisors, I think, when you're at that early stage, but on the understanding that only a few of them will stick and be valuable to you over the long term. But you can't do that without meeting quite a lot of people or talking to quite a lot of people and getting a sense as to, do you have a shared mission, a shared like approach, but different perspectives, which is that I think that's the key to a great mentoring relationship, is that you've got a shared outcome you're trying to achieve, but different perspectives on it, so as you can kind of bounce ideas off each other. We certainly encourage our founders to try and meet as many people as possible when they're in our program and that sort of pre-seed stage. But our experience is that as time goes on, that thins down to maybe a slightly smaller group of people where you've clicked.
Okay. One example I heard from a founder was she was actually presenting her startup in a smaller competition. And one of the persons after the competition just came up to her and said, I'm super interested in your idea. And that's how he became the advisor, and they have been sticking around till now. So as you said, networking, going out there, being interesting for other people and just presenting yourself is one of the best ways you can actually get the right people to focus on you.
Yeah, absolutely.
I want to switch gears right now and focus on the LP side of your fund, right? So there's this tech for good ideology, and then the LP's demand or need for capital returns, right? How do you balance these both in your fund?
Yeah, so we actually say one leads to the other.
Okay.
So we say essentially we're a thesis-based kind of fund in that where our thesis is that these kind of tech for good businesses are the businesses of the future. They're the businesses that are on the rise. They're the businesses that are going to be more valuable because they're going to be better at attracting customers. They're going to be better at attracting talent. They're going to be better at attracting capital. So our LPs are people who buy into that thesis. Essentially, they're like, or they're at least open to that thesis being right. Okay. They don't. You do meet LPs where they're just like, don't believe that.
Okay.
But they're not our LPs,
But how do you like channel your energy when you meet such an LP who says that this is not for us? Like, do you kind of come back and say, try to change their thought process and thinking, or it's a completely no-go for you?
It's pretty much no-go for us. So I think it's very hard to change that thesis. Having said that, you maybe think so I think LPs change over time. They don't change overnight, but they do change over time. I don't think they mind me saying this, but one of our biggest LPs is the British Business Bank, which is the sort of state owned VC LP in the UK. When we first approached them, which was quite a while ago now, the phrase they used was, "We don't do impact."
Okay,
fine. Then we approached them, several years later, and they were like, "Yeah, we might do impact."
Okay.
but it was an internal cultural change that happened where essentially they'd sort of written it off as something that other kinds of LPs should do, not them. And then they started to realize actually there's more and more emerging managers who are focusing on this. Maybe there's a trend here. They started to track it, and now actually I think they're very open to impact managers because they can see that those managers are getting really good deal flow, really good. I don't think there's not huge numbers of exits yet for them in that space, but the promise is there now.
Okay. And within your sphere of, let's say, looking out for LPs, do you think institutional LPs are much easier to get for tech for good? Or do you think family offices, high net worth individuals, they are a much more attractive avenue for you guys?
It's been very hard to generalize, actually. So it's we have both institutional LPs and family offices. We attract both, but I think there's a subset of each that is interested in what we do. So because at one stage we did think, should we segment like our fundraising list by institutional versus family office? But actually we found that was really unhelpful because I don't think there's necessarily a greater propensity for impact in one group or the other. You've just got to find the ones who are interested in impact, and that's less to do with what the type of capital, if you like, and more to do with kind of attitude. Okay.
And now do you think with the kind of position that you have in the market, with the kind of branding that you have, that the LPs come to you?
They do, yeah. And it's that's another change in the last, I guess, 3 or 4 years, actually, really, is that, I think I'm going to say most of the LPs in our newest fund were sort of inbound. That might not be quite true, but it's a much greater proportion.
Okay,
that's interesting.
And do you see more kind of international LPs also approaching you?
Yes.
In the UK market?
Yeah.
Would you want to expand in their markets as well? Don't answer if you don't want to, but
no. So that is interesting. Yeah, I think we have some German LPs, and what they told us was ultimately there's a relatively small number of managers in Germany who are doing impact stuff, and they've done all them.
Okay.
So now they were looking, where are the other impact investing markets? And I think people are automatically drawn to London because it probably does have the most developed, certainly tech for good and impact ecosystem of any other city, even more than the US, and that's interesting.
Oh, wow. How do you see the future of tech for good funds in general, like within the UK, within Europe, within the global kind of venture ecosystem?
Yeah, so I still think there's a real argument for very early stage funds to be quite generalist, because it's the riskiest portion, and the only way really of dealing with risk in venture capital is diversification. So having a broad set of startups at that really pre-seed stage, I think, is important. As things develop, so I think you'll see more specialist investors at sort of Series A and beyond who say take, let's say, preventative health or sort of lifelong learning education, and sort of specialize at that stage where things are, where you're betting on the market to some extent as well, but you've got real good sort of progress and track record metrics for the startups you invest in. So the way I expect it to develop is that you'll see maybe country by country, region by region, pre-seed, more generalist impact funds and tech for good funds, and then more specialist Series A and beyond.
Okay. And do you see the fundraising or more funds coming up in this tech for good area as well in the next years?
Yes, I think certainly. The last 2 years we've seen more funds. Very few at the pre-seed stage. I think seed seems to be the most popular stage for managers to start at, which I can understand. It's like it's more is it more straightforward? I don't know, but it's easier to model, and I think LPs are more comfortable with it. They really need to. If you're going early, if you're doing pre-seed, you need the kind of track record that we have to be able to show that you can deal with that many startups and that kind of complexity. So it's harder, I think, for people to be a new entrant at the pre-seed stage. But there's been a number of seed funds and later stage funds, and also we're starting to see kind of almost sub private equity impact funds, getting interested in tech for good startups.
Sounds good. We're almost through. I want to ask a personal question in the last. So aside from venture itself, have you read or seen something interesting in the market in general, which you would like to share with the audience?
Oh, something I've read recently.
And not in venture, but apart from venture.
So it's interesting. This is I've told a few people this and they've laughed, but this is partly coming out of our fundraising for the current fund, but I think there's a lot of people liken fundraising to sales. There's people talk about it as like, there's obviously your pipeline, and it's all about the numbers, the statistics. You have to get all the no's in order to get the yeses. And this is partly because I've been reading a lot of John le Carré novels, but I started to think, actually, I don't think this is like sales. I think it's espionage.
Okay.
I think actually, like trying to, as an emerging manager, to try and raise a fund, it's more intelligence gathering and kind of like, I won't say dark art, but than it is sales. And so actually, I think I was quite influenced by. There was a little while where I was reading sort of several George Smiley, John le Carré novels, and I was like, my job's just like this.
Okay. Maybe you should write a novel and other imagining managers can read it, right?
Yeah.
Cool. Paul, thank you. Thanks a lot for joining in. Thanks a lot.
Really good to be here.
Yeah.
Thanks.
All the best.